In this video on June 2nd, 2:26 p.m., I'm going to talk about reasons why I was quiet for the last few days. I've been trying to do mean reversion for both algo trading with cryptocurrency and Forex. Pair trading has more opportunities with pairs because when there's a co-integratable pair, it usually lasts for a couple days, a week. So it's much more longer, which enables you to trade that pair intraday versus what I've seen with crypto regarding trying to pair trade intraday with the long and the short, trying to co-integrate with that and what your challenges will be and why I'm going from intraday to daily. So I'm going to show you a couple of charts. A few days ago on June 4th, I posted a bunch of charts. Now this is from a Python script that I've played around with that you can get online. I modified it a little bit, but essentially what we're trying to do here is trying to determine using Z-scores and moving averages and all this stuff with using Bitcoin as a long and Ethereum as a short. So I'm just trying to determine the difference between the two. There are opportunities here between, let's say, using Bitcoin and Ethereum as a short. Essentially, this is the spread, the ratio between the two prices with a fast and a slow moving average. So you're right at the get-go challenged with the fact that you have to figure out what your optimal moving average parameters will be for both the fast and the slow. So that's number one. Next up, once you find out your mean, what will happen is you will get these opportunities here using the Z-score with what they call in this article rolling ratio Z-score, and here is the mean, and then we have our +1, -1 opportunities on when to long and short the pair when they breach either the +1 or the -1. So there are opportunities there, can be few and far between. So in this particular article, what I was asking was which long and short is better? The combination of Ethereum being the long, or Bitcoin versus the short, or the reverse. So in this case, what we have here is this combination where Bitcoin's the long and Ethereum is the short. And then if you reverse it with the same time period, which will give you the better performance if you use Ethereum as a long and Bitcoin as a short. So these are the resulting two charts. So it's just a quiz that came out. There was one answer in my private chat, so I'm not going to go over that in this video. Quite interesting, but that led me to part of the answers to other observations. Now again, with all these charts that I'm generating, what I'm hoping to do, depending upon the amount of market or trading opportunity, is to put them in this quant analytic membership. So here it's only $47 per month, plus you get in, you'll be grandfathered in permanently. So I'm just going to say that, and the price will go up in the next few days concerning that. So I take full advantage of it. So learning these bits and pieces of these charts, what I found was that when you try to do what I like to do is to screen the movers and the weak ones, I guess you could call them, to figure out using traditional long versus short, or the volume of either bid and ask, and figure out of the combined 18 pairs that I can watch against US dollar and Kraken, be able to determine other opportunities for hourly moves of other movers and of strong movers and weak movers, and be able to combine different uh, combinations to see if they co-integrate. The problem is that they move around so much. Even if you found something that did co-integrate, chances are that opportunity will probably last at most an hour, maybe on average a few minutes. So it's very next to impossible to be able to do that and trade like that on an intraday level. So what I did was I went ahead, took all the lessons learned so far that I've through the last few days, and try to figure out if you can do that on a daily basis. Because a week ago, 2 weeks ago, in a couple of my webinars, I mentioned and how you're seeing more opportunity when you look at the trading of daily charts versus intraday, hourly, or whatever you use, and you smooth out all of the noise on the intraday level and just focus on intraday, or sorry, on only on the daily, and then just set up a set of trading rules, combinations for the day. So I found a script and an article that will show you how to do that. I will be holding an event on Monday, webinar. I've not announced it yet, but it will take place on Monday. I'll reveal the links to that of the article. Very interesting. And I'm about to show you those charts. So because of the noise that you get intraday, I thought maybe it might be better to do pair trading on a daily set of charts. So yesterday I did play around. So just on the crypto side, do not think that what I have found with the Fibonacci and the patterns, this stuff works, but only under certain market conditions for crypto. With the intraday pair trading with crypto, as I said, it's too noisy. This does work for Forex, as I said, because the Forex, the co-integration seems to last for a few days. So you have some trading opportunities there on for a couple of days, maybe as long as a week, who knows. But here are the new charts for the crypto. Now, what I'm going to show you here is the article used Bitcoin and Bitcoin Cash, thinking that there is co-integration there because Bitcoin and then Bitcoin Cash is a fork of Bitcoin, which means that it could co-integrate. So I figured if that's the logic, why don't we do the same with Ethereum Classic and Ethereum and see if we can do the same. So here's the chart. And one of the key things that you have to understand when doing these measurements on intraday or daily, if you're going to do pair trading on intraday, specifically on crypto, it's very, very, very important you understand it's tough to get historical data for over a year, 2 years of data for cryptocurrency. I thought it was going to be easy. The only place you could go is Bitfinex, and that script that I posted could take days just to get a set of data for one pair, let alone over, let's say, 18 pairs. So I will tell you that was not a good option, but I have discovered a way to generate back historical data for cryptocurrency from Crypto Compare through MotiveWave. I got a video on my YouTube channel, so check out my MotiveWave playlist for that video where I show you how to do that. So here what we're doing is we've got the Ethereum, so we have what they call the raw spread, the Z score, and then the spread with the percent daily moves that give you, do you have opportunity here in this particular chart? Let me see if I can blow it up. Not really, but yeah, so you can see it. So that's the raw spread. This is the Z score, and then this is the daily spread, daily moves. So there is opportunity, as what was mentioned this morning on my chat server, ta-da, right here, that you can use daily data, but the opportunities are not going to be as much. So that's why I'm planning to find the combinations to see what's co-integratable and trade off that for however long that opportunity exists to increase those trading opportunities, but across multiple uh, multiple strong players, or ones that have a long opportunity versus the short opportunities out of the 18 pairs. So that's the first set of charts. This is the actual combination here. Is this the right? Okay, I hope this is the one I want. Yes, so this is the typical one where you can figure out here, here, and here are long, short opportunities, but on top of that, you can flip the trade between going long and short. You can flip it and then be able to make more cash potentially if you get the timing right on the pair, to see if you can make money at that level by shorting and long the correct pair, as long as they co-integrate properly. But the key is the length of time, not the number of observations. As what was pointed out in the chat server, is that if you have, let's say, 500 days worth of data, and trading only on daily data, you will be able to trade that with certainty, because you're only using 5 data points of 500 days of data. In this case, I think it's farther more than that, but in and around there, it's going to lump to about 1.5 to 2 years worth of trading data. And now if you compare that to 10,000 data points over, let's say, I don't know, 6 months, be it tick data, minute data, 5-minute, hourly, doesn't matter. But because the time frame is not long enough of 6 months, you're not going to get true co-integration of the pairs. So you have to stretch it out by time. And when you're using daily, obviously you can only trade on daily time. So that's better. I hope that this may be a smarter way to do it, to smooth out the noise that you find on an intraday level. So essentially what we're doing here is we're moving away from intraday and doing more of a hodling kind of effect, meaning you buy for the long term, or sell or short on the long term as well. And that's kind of how what I've seen with some of the journaling software. That's how they do it. It's not what we know like in Interactive Brokers. We can put on a trade, you get a trade session object ID, and they can track that, and it will stay open until you close the position. It doesn't work that way in the world of crypto, especially on any exchange. All it marks off is that you bought X coin, and then you sell it. That's all it does. So this pair trading concept on a daily basis might work better for that type of reporting and journaling. So we'll see how it works. But I'm going to write a generic one so it'll work with any combination of pairs as long as it can co-integrate. So again, that will all be hopefully part of the analytics service that I've talked about. I will have a session on that on Monday, 12 o'clock Eastern Standard Time, for however long. That will be put behind my paywall of the Elite service for anybody who wants access to the playback, because that will be valuable information. I can go over this then somewhat, but I hope people will watch this video and get Q&A from it, and then new material come out of that, new content, which is usually the case. So that's pretty well where things are moving. So now we have a combination of Forex and crypto. We can do momentum-based trading as well as somewhat mean reversion, but it's more pair trading, because mean reversion on one pair is not as effective if you have a combination of a long and a short method. And with this daily business that I'm talking about, there's still a lot more to be developed in terms of applying stop losses. How do you factor in things like microstructure events, things like that. So We'll see how it works, but I'm going to focus on that and stop at that point to build out the analytics and maybe move on. But I will tell you this, when it comes to the machine learning, that topic comes up more and more and more. Do this, but apply machine learning. So expect more of that, but I'm waiting out to see the new TensorFlow 2, which is supposed to make life a lot easier. But we'll see. Other than that, hopefully this helped you out. And we shall talk to you later. Have a good day.